Have you ever entered a trade only to watch price stop you out? And then watch the market move exactly in the direction you originally expected? If that has happened to you, you're not alone. In fact, I believe one of the biggest reasons traders lose money isn't because they have a bad strategy. It's because they enter before the market has actually confirmed their idea. They see price approaching support and immediately buy. They see price approaching resistance and immediately sell. They're trading what they think will happen instead of waiting for the market to show them what is actually happening. Sometimes it works, but more often than not, they've entered too early. Over the years, I realized something that completely changed the way I trade. I stopped asking myself, where should I enter? And I started asking, has the market earned my entry? That one question transformed my decision making. Today, I'm going to share the exact confirmation process I personally wait for before entering any trade. There is no guessing, no prediction, no chasing, just a structured framework that helps me decide whether I should execute a trade or simply wait. Most traders spend all their time looking for entries. Professional traders spend their time looking for confirmation. There is a huge difference. Think about crossing a busy road. You don't close your eyes and hope the traffic stops. You wait until it's safe to cross. Trading should be exactly the same. Yet every day, traders enter positions before the market has provided any evidence that buyers or sellers have actually taken control. They confuse reaching a level with confirmation. Those are two completely different things. At Fundex, I don't enter a trade simply because price reaches support or resistance. I wait for the market to confirm that my idea is valid. That confirmation removes emotion, it removes guessing, and over time it creates consistency. Every trade I take follows the same simple decision-making process. First, I establish the higher time frame context. Second, I identify meaningful liquidity. Third, I wait for market confirmation. And finally, if everything aligns, I execute. If any one of those steps is missing, I simply don't trade. Everything starts with context. Before I even think about entering a position, I already know what the higher time frames are telling me. I begin my analysis with the monthly chart. Then I move to the weekly chart, then the daily chart. I'm looking for the overall market structure. I'm identifying important highs and lows. I'm marking the major liquidity objectives. This gives me a roadmap for the trading week ahead. Without context, almost every setup looks attractive. With context, most of those setups disappear. And that's exactly what we want. Trading isn't about finding more opportunities, it's about identifying better opportunities. Once I understand the higher time frame context, I ask a very simple question. Where is the market likely seeking liquidity? I'm interested in areas such as the previous day's high, the previous day's low, the weekly high, the weekly low, and significant swing highs and swing lows. These are the areas where I become interested in watching price. But reaching liquidity does not automatically mean I should enter a trade. It simply tells me the market has arrived at an important location. The market still needs to confirm my idea. This is where patience becomes one of your greatest advantages. Now I simply watch how price reacts. Does the market reject the level? Does it sweep liquidity and return? Are buyers beginning to take control, or are sellers stepping in? Sometimes nothing happens, and that's perfectly fine. One of the most profitable decisions you will ever make is deciding not to trade. No confirmation is still information. It tells me to stay patient and wait for the next opportunity. I never chase missed trades. If I miss an entry, I let it go. Because consistency is not built by chasing candles. Consistency is built by waiting for quality. Only after the market has confirmed my idea do I think about execution. My execution is never based on hope. It's based on evidence. This is where I look for one or more confirmation signals. That could be an engulfing candle, a key reversal candle, or a diamond pivot, forming at a meaningful swing high or swing low. These tools do not create the trade. They simply confirm the trade. The higher time frame has already given me the context. Liquidity has already identified the location. The market reaction has already shown me that buyers or sellers are taking control. The confirmation simply tells me that the probability of the trade has improved. There is another lesson that is just as important. Sometimes the market reaches liquidity, sometimes it looks interesting, but the confirmation never appears. When that happens, I don't force the trade, I simply wait. Waiting is a trading decision. In fact, some of the best trades you'll ever take are the ones you never entered, because every trade you avoid that doesn't meet your rules protects both your capital and your confidence. Let's look at a few examples. In the first example, everything aligns. The higher time frame provides the context. Price reaches meaningful liquidity. The market reacts, an engulfing candle forms, a diamond pivot appears at a meaningful swing. Only then do I execute the trade. Now let's compare that with another example. Price reaches liquidity. Many traders would enter immediately, but there is no confirmation, no rejection, no clear shift in momentum, no confirmation candle, no diamond pivot. For me, that's a simple decision. No trade. Now imagine another situation. Everything lines up, the confirmation appears, but you miss the entry. Most traders immediately chase the market because they're afraid of missing out. I don't. If I miss the trade, I let it go. There will always be another opportunity. The market isn't going anywhere. Protecting your discipline is more important than catching every move. The biggest lesson I want you to remember from today's video is this. Stop asking yourself, where should I enter? Start asking yourself, has the market confirmed my idea? That one question can completely change the quality of your trading decisions, because consistency isn't built by taking more trades. It's built by saying no to trades that never deserved your capital in the first place. If you found value in this video, let me know in the comments. What confirmation do you personally wait for before entering a trade? I'd genuinely love to hear your thoughts. And if you're serious about becoming a consistently profitable trader, make sure you subscribe to the channel. Over the next few weeks, I'll be taking you through what I call the Fundex decision framework. We'll cover how I build my weekly market bias, how I identify meaningful liquidity, how I filter low-quality setups, how I manage risk, and how I review my trades to continuously improve my performance. Because at Fundex, we believe one simple principle. Trading is a process, not a prediction. Master the market. Master yourself.